Good morning, Mr. Duc and Ms. Thor. My name is Sung from group number 6. Today, our group wants to present our financial analysis for one of the most leading companies in Vietnam brewery industry, which is Sabeco. Now, before moving to the first part, let's take a look through our content table. We divided this presentation into four main parts, and I, as the first person, will talk about some general information about Sabeco. The company Forerunner was a modest brewery founded in 1875. Then, after integrating with some other companies, Sabeco was established. And up to 2021, during 146 years in building and developing, Sabeco has been recognized as a nation brand and still continuously makes Vietnamese proud of their products. Additionally, they target a revenue of 33.49 trillion Vietnam dong at the end of this year. Next, Trang will begin with the analysis of balance sheet.
Now we will come to the analysis of profit loss and the balance sheet. And now I will talk about the end year balance sheet. So the focus of this section is the comparisons between Sabeco's and Harbico's balance sheet in 2019 to 2020. The study will be undertaken under 6 primary numbers for better evaluations. And the first one is the total current assets. So from the figures of 2 companies, it is evident that Sabeco showed better performance than Harbico in the past 3 years. It can be easily proved as Sabeco's data increased whereas Harbico data decreased from 2018 to 2020. Sabeco's had an increase of about 4,474 million in 2 years and continue growing slightly into the years of 2020. In contrast, the statistics of Harbico's began with 5 billion 385 million and steadily declined over the course of 3 years. And the next one is the total non-current assets. In general, Sabeco long-term assets were almost twice as large as Habico's. The numbers of Sabeco started with 7,666 million in the years of 2018 and then increased to 7,861 million in 2020. However, the figure from Harbico shows a declining trend of about 674 million over a 3-year period. And the next one is the total current and non-current liabilities. From 2018 to 2019, Sabeco current liabilities saw a slight increase of 162 million in figures, and in contrast, the figures of Harbico in these 2 years decreased and even become lower than in 2020. In comparison to Sabeco's, Harbico data follow a similar pattern. It dropped drastically from 2018 to 2020. And the next is the non-current liabilities. The patterns in Sabeco's and Harbico's were radically different. Sabeco's long-term liabilities experienced a significant increase from 2018 to 2019 and 188 million increase in 2020. In contrast, Harbico's statistics decreased by around 50% the next year before remaining constant at the conclusions of the year. And the next part is the total stockholder equities. Although both statistics increased in the same ways, Sabeco's owner equity stayed significantly larger than Harbico's across the 3-year periods. It began with 16 billion 111 million in 2018 and then progressively climbs the next years and to over 21 billion the following year. Harbico saw an increase of 251 million in 2019 and a double growth in the next year. And the last one is the common side balance sheet. We will come to the term of asset first. So the total assets are break into long-term and short-terms. We can see there has been an inverse trend between these 2 categories. So in detail, Sabeco's current assets view a significant increase from 2018 to 2019 and a slight growth in 2020. On behalf of non-current assets, it has shown an inverse proportions. inverse trends. The proportions reached its peaks in 2018 and decreased afterward during 3 consecutive years. On the other hand, Habico's were also in the same situations. Habico's short-term assets were 58.52% in 2018 and dropped a year after, but quickly rehabilitated in 2020. For long-term assets, the company has 41.48% of long-term in totals and increased slightly in 2019, but dropped slightly in 2020. And the next one is the resource of common-side balance sheet. So Sabeco current liabilities decreased gradually year on year. The company's proportions were 26.49% in 2018, but remained only 18.9% in 2020, which was a good signal that indicated the companies did not have to worry much about its debts. And however, long-term liabilities more than double over these 3 years. And in terms of owner equities, the proportions increased gradually by around 2% per year. This also positive signals that the more the shareholders' equity increase, the more expansions the profit of the companies is. And for Habico, the same trends were viewed in both current and non-current liabilities. In general, it had decreased over the years, and Habico's current liabilities dropped with while on behalf of non-current liabilities, it witnessed a gradually decrease by 1% over a year, and Habico shareholder equities also recorded a positive signals during the 3 consecutive years. And that's all about my part. Next part about income statement will be presented by Sung.
Thank you, Jane. Now I will continue with the analysis for Sabeco income statement based on 3 previous years. In this session, for a better evaluation and comparison, I will go through 5 main components. Number 1 is about net sales revenues, and that can be inferred from the data of Sabeco. Though in 2019, the growth rate of revenue stood at 5.15%, which is higher than 4.88% in 2018, the situation varied dramatically in the next year when Sabeco recorded a reduction from around 38 trillion Vietnam dong to only 28 trillion Vietnam dong. Compared with the rival, over the same period, Habeco sales revenue tends to share the same trend, when increasing in 2019 and decreasing in 2020, reaching at 7 trillion Vietnam dong at the end. Under the context of COVID-19 pandemic, plus the tougher government decree, is easily understood for the massive loss in net sales of both companies in 2020. Next, moving to the cost of goods sold, Sabeco and Habeco both share the downward trend over the period. In detail, cost of goods sold of Sabeco were 77.51% in 2018, 74% in 2019, and 69.60% in 2020. The third element will be about total operating expenses before income tax. The accumulated figures show that Sabeco is more effective in managing their total expenses. Specifically, over the 3-year period, Sabeco total expenses decreased from 87.65% to 82.34% due to the improvement in production costs of Sabeco, such as new technologies, higher skill, more competitive material sources. Meanwhile, Habeco's statistics were moving in the opposite direction, when increasing by nearly 5% compared with 2018. This may be because of the increase in selling and general and administrative expenses through the years. Now, I will present the 4th component relating to non-operating income. The statistics show that 2 firms observed an inverse trend. Compared with the base year 2018, Sabeco non-operating income in 2020 witnessed a fall by 4 billion Vietnam dong. On the other hand, Habeco recorded a significant movement when gaining with each passing year and reached at 282 trillion Vietnam dong in 2020. nearly 8 times higher than figures of Sabeco at the same time. This outcompeted statistic is the result of the firm revision for short-term payables. And moving to the last component, by dividing one company net income with this total number of outstanding shares, EPS can indicate the portion of a company profit. Over the 3-year time span, both firms experienced a moderate growth, specifically with Sabeco from 6,190 Vietnam dong in 2018 to 7,133 Vietnam dong in 2020. And with Habeco was 2,059 in 2018 to 2,793 Vietnam dong in 2020. Now Hyun will continue with our group presentation.
So thank you so for the net income analysis. So now we will come through to the ratio analysis. So first one will come to the current ratio. So this one is about the Sabeco and Habeco analysis. So both of these firms current ratio has increased significantly over the company 3 year in operations. So in fact, the Sabeco has a higher current ratio than Habeco in 2018, but those comparisons reached a peak of 3.77 and 2.58 in 2020. So in conclusion, a current ratio greater than 1.0 will benefit because it's allowed the company to allocate the financial resources and to remain solvent in the short terms. Another one ratio, which we continue to invest, is about the quick ratio. The quick ratio is about the current ratio minus the inventory and divided to the current liabilities. So from 2018 to 2020, the quick ratio of Sabeco and Habeco shows an overall upward trend. So Sabeco peaked at the 3.49 from 2.17 in 2018, and Habeco touched the point of 2.58 from 1.18 in 2020. So both firms' statistics were reasonably high, especially over the 2020 industry ratio, indicating that they have a liquid assets ready to cover the current liabilities. So the last one in the liquidity ratio is about the cash. The cash ratio is about the cash divided to the current liabilities. So both Sabeco and Habeco has the less than one, indicated that both companies did not have enough cash to pay the short-term debts. Nonetheless, their ability to cover all the short-term debts and still have the cash remaining is shown by the ratio, which are higher than the industry ratio. Thus, the ratio is under than 1.0. So next we'll come through the efficiency ratio, and the first one is about the inventory turnover. So both firms reported that inventory turnover ratios are higher than the industry norms, which Sabeco is 15.36 and exceeding to Habeco is 8.51 in 2018. Nonetheless, the spread between two of them are decreasing due to the Sabeco decline and Habeco slightly rising. Next, we will come through the day sale inventory. This is influenced by the inventory turnover. So Sabeco has fewer inventory day sale than Habeco, which Habeco covered the inventory day sale is almost 43 days compared to its competitors, which is 24 days. And the number of days of Sabeco inventory was so increased steadily and reaching the 27.14 in 2020. So next we will come through the receivable turnover. So when compared to Sabeco, the receivable turnover ratio of Habeco is slightly lower, which indicate it took Habeco longer day to collect the credit sale when it did from Sabeco. Another one is about the day sale inventory, which Habeco did have a fluctuations in the 2-year period, in which it had its lowest point for the 14.64 days in 2018 before leveling up to 18.83 days in the following years. So last one, we will come through the total assets turnover. So for the current ratio, which is indicated by the cell divided to the total assets. So in general, the total assets turnover of Sabeco has been downward, but whereas the total assets of Habeco is being fluctuating. So the figure for Habeco increased by a significant margin to 1.2 in 2019 before declining to 0.97 in the following years. So the difference between Sabeco and Habeco total assets turnover ratio were quite noticeable in the past, but the gap between two of the companies have been narrowed down in the recent year. So next, we'll continue with the presentations.
Thank you, Hing. And after understanding about efficiency ratios, and my name is Jam, and now I will continue with long-term solvency ratios. It can be seen that both corporations increasingly have to rely on debt to finance their assets, but their ability to meet interest expense has decreased significantly. The general obligation ratio and the debt to equity ratios of Sabeco and Habeco both decreased from 2018 and to 2020. Sabeco debt to equity ratio is continuously lower than Habeco's. Sabeco share was 0.39 in 2018, while Habeco was 0.87. Although Habeco debt to equity ratio dropped significantly from 0.87 to 0.35 in 2020, Sabeco debt to equity ratio is still lower than that of its competitors. So the debt to equity ratios of both companies are variable, indicating that they do not subsidize their pro-grip obligation and take on a lower level of risk. With the time interest earned and cash coverage, the attractive return over time ratio is used to survey a company's degree of oversight of attractive engagement. Both companies can pay their attractive commitment. On the other hand, Sabeco proved to be better at compensating attractively as their share was significantly higher than that of Habeco. Sabeco interest rate increased significantly in the period 2018 to 2019, reaching 178.93. However, in 2020, it had plummeted to just 95.97%. Similarly, the company's cash ratio rose to 196.25 in 2019 before limiting the following year. On the other hand, the profit generated by Habeco and the cash payout ratio increased more steadily. About profitability ratio, look at the ratio comparison just between Sabeco and Habeco. Sabeco productivity has generally remained reliable over the long period of time, despite the fact that the institution was increasing in 2018. It was still able to recover during the year. The main reason for the decline in 2018 was the increase in raw material import this year, as shown in the earning report survey. And it showed that each organization in this industry has solved this problem in 2018. Over the same period, Habeco and Sabeco have had to bargain with a decrease in profit margin. Besides, Sabeco and Habeco have different contrasts in their ability to benefit from transaction or operation, more resource adjustment, or shareholder value. During this time, the profit margin of both companies expanded significantly. Sabeco proved to be the superior alternative, as on the radio they were much higher than that of Habeco. On the other hand, Sabeco saw the more potential in the contrasting transaction into benefit as on of its interest level during this time rather than 0.1%. And next is market value ratios. When comparing two business showcase value, the PE proportion of Sabeco and Habeco are noticeable different. With opposite inclination, speculators were willing to pay more per Vietnam of Habeco, earning between 80-19 to 80-20. 2020 because Habeco BA radio has generally 1.3 times higher than Sabeco. Financial experts are expected to contribute 35.28 times for every Vietnam Dong of the Sabeco earnings in 2019, compared to 45.8 times to Habeco earnings. Furthermore, Sabeco BA percentage ratio in 2019 appeared to decline from 35.28 to 32.8 times, until rebounding to 33.67 times recently. On the other hand, the Habeco trend is undeniable. In 2019, the BA ratio peaked at 46.44 times and then began to decline in 2020, decreasingly to 44.31 times. And that was my part. Next is conclusion.
So continue with the conclusions. In conclusion, we can say that the COVID-19 pandemic had a negative impact on the operations of Sabeco in the years of 2020. Nonetheless, it's reduced the company's sale and also the profit after experiencing significant growth in the year before. About Sabeco operations were more efficient as evident by the fact that its turnover ratio and profitabilities are significantly higher. Now, however, for Habeco, the value of Habeco is significantly higher than Sabeco, as evidence of the fact that its earning ratio and also of the results of Sabeco's in the period between 2018 and 2020 actually. So next is about our reference list, and thank you for listening.